Hello everyone, welcome to Finance with Justus. I'm Justus. I already made a video on the Facebook Q3 numbers that were announced some time ago. I didn't sound the most optimistic about the company, and I think actually the report was solid. To be very transparent, around 50% of my portfolio is Meta, so take whatever I say from the perspective of a Meta shareholder, what I see in the company. What I think a lot of people take wrong is just look at the expenses for the metaverse and higher expenses in general, and think, oh, all the money is going to the metaverse. But actually the core business is doing great, and it's improving a lot, and they're investing a lot of money into it. Active users are at an all-time high, time spent is at an all-time high, the users are increasing, Reels is going by 50% in 6 months, because Reels is lower monetized than the rest of Instagram, so they're currently taking a 2 billion headwind, but that is going to neutralize over the next 12 to 18 months. And the investments that they're doing in 2023 are mostly in AI and data center. And that is mostly for the core business, not for the metaverse. It's not like they're just gonna throw the money forever at it. They literally said in their report, we are carefully evaluating the return we achieve from those investments, which will inform the scale of our AI investments beyond 2023. So next year, they're gonna put a lot of money into it, are gonna look how much is that gonna pay off, and they're gonna see, okay, are we gonna invest more or less in it? So if I invest less, we're gonna get more free cash flow, but also a lower return. So if they're gonna invest more, that means the core business is doing very well, and the improvements are very good. An example of the investments we had here. In the Q2 call, we had shared that a single AI advancement, just one, in scaling our recommendations models has led to a 15% watch time gain for Facebook Reels. And that gain has continued to grow, and we expect that there will be additional watch time improvements coming from that work. So basically, they got a 15% return from one AI investment. You can see how important it is when Meta invests in recommendation. Before I continue, if you like informative videos like these where we discuss stocks and investments, maybe leave a like and subscribe and join our community. It's free and you can always unsubscribe if you change your mind later, so please subscribe if you want to support me. Thank you. So they're investing in their core business and it's working, they're seeing improvements from it, their core business is improving, users are growing, so that is already great. The only thing is the expenses, of course. Eventually they will come down after 2023 or they will lead to very high growth. So both outcomes I like. They're finally monetizing their messaging system. Click-to-messaging ads reached 9 billion. WhatsApp is still being implemented here. WhatsApp click-to-messaging ads made 1.5 billion. That's 80% year-over-year growth. And what's also great is that North America is the fastest growing segment for WhatsApp. Why is that great? Because North America has the highest revenue per user. So it's not like the rest of Meta, where the rest of the world, Asia Pacific, etc. is growing, where the revenue per user is still lower, which will increase over time, of course, as they develop more and more. But here actually the core market with very high revenue per user is increasing fast. So I think a lot of people are just looking at the metaverse expenses, which obviously hurt Meta. I don't like them. I think they should be at least halved. But the core business is doing great. Of course they're burning some money in the metaverse, but that's no reason for Meta to fall below $100 a share. They're buying back shares. Their core business is incredibly intact. They're investing in it to grow in the next year, and maybe in the next years after that, depending on how the return goes. This is what I want in a business. So with CapEx coming down significantly after 2023, or an extension of investment period, which would mean that the business is growing faster than expected, a cheap forward PE of 11. A forward PE. So the next year, where the expenses are going to be extremely high, the PE is going to be 11. I have seen AT&T sometimes trade at that. They still have a great balance sheet of 40 billion cash versus 10 billion long-term debt. So they're at no risk of running out of money next year. They expect higher revenue growth already next year than this year. I am scrambling to get every Meta share I can get. It is a big part of my portfolio. It is around 50% currently. I want to be transparent. I am showing you that I own Meta. I am maybe heavily biased in it, but I think it's a great company. And I think currently it is all just fear and that people are spooked by this metaverse investment. I'm gonna be bold here and I'm gonna maybe call a bottom up. I don't think it's gonna fall much. I think those were the last earnings where people said like, okay, I'm gonna stay a bit longer to see if I cut the metaverse spending. And I think Zuckerberg just spooked everyone away who wanted that. So I'm gonna scramble to get every share I can get. I think it's gonna be a dead money through 2023. Only 2024 people are gonna realize Facebook, in my opinion, when they cut expenses or show the return on those investments. What do you think about Meta? Do you own any? Have you sold any? Put them in the comments. I wish you a good day.